Another round of tariffs, and yes, the economy is feeling the ripple effects. But this time, the impact isn't just on Wall Street, it's making its way into the heart of Raleigh's housing market. President Trump's recent Liberation Day tariff package is already causing a stir, especially in industries that rely heavily on materials like steel and aluminum, real estate included. According to the National Association of Home Builders, these new tariffs are expected to raise the average cost of new home construction by about $9,200. And in some cases, projections run as high as $25,000. Now, before you panic, this isn't a doom and gloom forecast. Quite the opposite, actually. In this video, I'm going to show you exactly what these changes mean for you, whether you're buying, selling, or investing in the Raleigh area, and how you can make strategic, informed decisions no matter what direction the market moves in. Raleigh is on the move, with over $3.8 billion in proposed development and a steady flow of new residents. Our market has strong fundamentals that continue to make this city a prime location for real estate. But as material costs rise and supply chains shift, certain opportunities may not last forever. Timing, as always, is key. Let's start by understanding what these tariffs are and how they directly impact the construction side of real estate in our region. When President Trump announced the Liberation Day tariffs in early April 2025, he introduced a significant expansion of existing trade policies. These changes included a 34% tax on Chinese goods, on top of the existing rate of 20%. In addition, there's a new 20% levy on goods imported from the European Union. Meanwhile, the earlier 25% tariffs on steel and aluminum remain firmly in place. Now, why does this matter to us here in Raleigh? Because these materials are foundational to the way we build. Steel and aluminum are used in everything from commercial high-rises to residential fasteners, vents, HVAC systems, and even the framework in modern homes. Roughly 1/3 of all lumber used in the US is imported, and about 70% of that comes from Canada. So when tariffs go up, so do the material costs for builders. The NAHB reports that this increase could raise the price of a newly built home by nearly $10,000 on average. And in cities like Raleigh, where we're seeing a building boom, that adds up fast. As one industry expert put it, Raleigh is growing. We have a strong economy that continues to attract people and businesses to the market. A lot of the buildings going up, both commercial and residential, rely on steel, aluminum, and advanced mechanical systems. We're not just talking about dollars and cents here, we're talking about time, availability, and how that all flows through to home buyers. To give you a visual, imagine this: a pre-tariff construction budget for a 2,400 square foot home in Raleigh. Now add $10,000 to $25,000 depending on the builder, material source, and labor timeline. That's a meaningful shift, especially for families already budgeting closely. But here's the good news: this also means that existing homes are becoming more competitive in terms of value. And as you'll see, that opens doors. Let's talk about supply and pricing, because when construction slows or costs climb, it impacts more than builders. It creates waves across the entire market. As of March 2025, there were 2,300 homes for sale in Raleigh, which is a 17.5% increase from February. That's good news for buyers who've been frustrated by limited choices over the past couple of years. Inventory is growing across all home types. One-bedroom homes are up 34%, two-bedroom homes are up 22%, and three-bedroom homes are up 17%. Four bedrooms by 7%, and five-bedroom homes by a whopping 12.9%. So what does that mean? It means our market is still going strong. Homes are selling, the prices continue to appreciate, but with more homes available, buyers now have more room to breathe, and sellers need to be more strategic. In Wake County alone, pending home sales are up 80% compared to this same week last year. That tells us that despite headlines and uncertainty, people are still moving forward with confidence, and opportunity is still very much alive here. Of course, policy changes don't happen in a vacuum. Since the April 2nd tariff announcement, the Dow Jones and S&P 500 have dipped nearly 10%. Locally, companies like Advance Auto Parts saw their stock fall by nearly 17% in the days following the announcement, especially those relying on investment portfolios for down payments or closing costs. But again, perspective matters. With every shift comes a silver lining, and we're about to explore what that means for you. So let's break this down into actionable strategies. What should buyers and sellers in Raleigh be doing right now? If you're buying, now might be the best time in months to take action. Why? Because mortgage rates are actually trending downward as investors move their money into safer assets like treasury bonds. That creates immense opportunity for home buyers. And with new construction getting more expensive, existing existing homes are starting to look like better value. Plus, the sharp increase in pending sales tells us many buyers aren't waiting. They're jumping in now to lock in lower rates and get ahead of potential price increases. Some neighborhoods are offering especially strong value based on inventory and trend lines, and if you're strategic and you understand which areas are growing steadily, you can still get into a great home before the next wave of pricing catches up. If you're selling, more homes on the market means more competition, but also more buyers looking to make a move. Because new construction is getting pricier, your existing home may be more attractive than ever. The key is timeliness and pricing. Right now, you still have an opportunity to list before any broader economic uncertainty sets in, but you need to be smart. Understand buyer psychology, stay flexible, and work with someone who knows how to position your home in this type of environment. As NAHB Chairman Buddy Hughes said recently, builders continue to face elevated building material costs that are exacerbated by tariff issues, as well as other supply-side challenges like labor and lot shortages. This makes well-maintained existing homes even more valuable if marketed correctly. And now for my investors, this might be your moment. While tariffs are reshaping costs and slowing some sectors, smart investors know that disruption often brings opportunity. Over half of Americans now believe tariffs will make housing less affordable, and 70% say they think tariffs will slow home sales. That could put more pressure on the rental market as more people choose to lease instead of buy. Multifamily properties, duplexes, and even single-family rentals could see increased demand, especially if mortgage qualifications tighten or rates rise again later this year. Commercial real estate may see slower expansion among certain tech and supply chain reliant businesses, but the long-term picture is still bright. The Downtown Raleigh Alliance reports $3.8 billion worth of planned developments, proof that confidence in our region is still high even with short-term bumps. The key to investing right now, focus on fundamentals. Look at areas with strong job growth, great schools, and infrastructure improvements. Consider properties with high replacement value due to rising construction costs. And above all, think long term. To wrap this up, Raleigh's housing market is evolving. We're navigating a new set of rules shaped by policy, pricing, and global economics. But with strong local fundamentals and a steady stream of people relocating here, opportunity is still very much alive. Here are the key takeaways. Tariffs are increasing material costs, raising the price of new homes by an average of $9,200. Raleigh's inventory is growing up 17.5%, but prices are still appreciating. Pending sales are up 80% in Wake County, showing high buyer activity. Existing homes are becoming more attractive compared to rising new construction costs. Investors should watch for increased rental demand and explore value zones in emerging neighborhoods. If you want a custom game plan based on your unique goals, whether you're buying, selling, or investing, send me an email at hello@davisandmaine.com. I'd love to help you navigate this market confidently and strategically. And hey, before you go, if this video helped you see things more clearly, don't forget to subscribe for weekly videos from us every single Thursday. See you guys in the next one.